All right, my people, we are live. It's a beautiful Monday. Hope you guys had a blessed weekend. Got some proper rest or whatever you did. And it's Monday, new weekend, and we're about to hit the charts. We're about to hit the markets. And we're about to scrape up some moolah from these failed institutions. There's more FUD going on in the banking system. More FUD, more banks on the rink of collapse, and it's not only US, it's Europe as well. Now we got Deutsche Bank, and I've been screaming Deutsche Bank for a while now. I knew they were in an unstable situation, and it's coming to proof now. So we will see how that develops, but it seems like they're going down. And in the US, we got a lot of FUD. We got a lot of FUD. So we even got JP Morgan basically saying to these smaller commercial banks, regional banks, that you guys are fucked. Sorry, but you guys are fucked, and you better do what needs to be done to get out of the situation as sound as possible. But Google it. You can read the articles. I'm not gonna dive too deep into news and fundamentals here, but just so you guys understand what's going on in the markets, it's a lot of FUD out there. Good morning, Rio. Morning, Martin. Nice to see you guys. Estonia in the house. Estonia representing always. All right, so let's look at this. I went into a little trade here in the morning. Let's see how that goes. I didn't call it out because it was a very small and risky scalp. But what we're gonna do now, we're gonna check gold from a naked chart. I'm gonna remove all these drawings and we're gonna check it from a naked chart because I need to break down gold properly for y'all. There is a lot of things that's happened, and there's a lot to happen, of course, also. So I want to break this down for y'all from scratch. Let's clean this chart up completely, and let's just take it from scratch. Okay, so look, gold, the important swings that you got to keep in mind. So we got this big swing here. We're on a daily time frame now. We got this big swing, which is this big sequence here. Why is this one important? Because it's the last major bearish swing that we had, and it started in 2022 in March, or I think it was February even. Let's see. Oh, it was March, yeah. So, and since then we've been on a bearish move, and since November of 22 we've been on a very bullish move. All right. Now, first, to understand where we are on this bullish move, we need to understand where the levels are for this bearish move. So we pull out Fibonacci as we always do. And I've been getting some questions on my strategy, how I trade. Watch this, because this is a big part of my strategy. So first off, to understand where we are at this sequence, we need to understand what are the levels of the previous sequence. So we see the levels here. We have the supply zone here, the 78.6 Fibonacci retracement until the 88.6. We have the sweet spot here, the 50% to the 61.88%. So sweet spot, supply zone. That's the important zones to remember right here. Okay. Now this here shows us where we are from the previous drop. And it shows that we've been inside the supply zone trying to break through, but it didn't happen. In the same time, I want to bring out the 2000 level. Why is that? Because it's a significant level that we've been trying to break out several times, and haven't succeeded. We broke through and got right back underneath again. I'm gonna show you what I mean. So yeah, you guys see, we broke through, boom, dipped straight back underneath, came back up, tried to break up again, but it didn't happen. Same here, broke above, got dumped right underneath again, tried to break up again, didn't happen, tried to break up again, didn't happen, came close, dropped, and now we're here again. And I've been saying that this is the time that we're going to break it. But we have seen the resistance, we have faced the resistance, and we might do something like this first. I actually think this is going to happen. I think we're coming into the sweet spot zone once again, and then we're going through. So back to the bigger picture. All right, so now we see this. We see the levels from the previous drop. Now we have this sequence, we have this drop, and we have this sequence. All right, we start with this sequence here, this bottom. And I make these lines thinner to distinguish them. So the thicker the lines on the Fibonacci, the bigger the swing that it comes from. So when we pull in this fib out, it actually doesn't give us so much. It only shows a very strong confluence down here. We get the 50% fib from this swing correlating perfectly with the, I don't even know what that is, with the 38.2 Fibonacci retracement on the big swing. Interesting. Okay. No, it's actually 23.6 Fibonacci retracement. All right, cool. To be honest, this one didn't give so much value for us. It only gives us a level, a target, where I see this market coming to, which is the 27.2 fib retracement. So after we've done this drop, I definitely think we're coming up to see 2052. So we have a major climb. Like, let's say it does what I think it will do. It come down to the sweet spot zone, which is down here. So let's say it comes down here, and from here starts climbing up to the 27.2 Fibonacci retracement, or extension, sorry. That is 2,000 pips. 2,000 pips. It's not a bad move. That's a major profit. That's a funded account. So that's that. But I'm gonna remove this one for now because it's not relevant right now. We want to see what's happening right now. And to do that, let's check the last drop we had, and that's this sequence right here. Let's go in the 4-hourly time frame so we can zoom it in a little bit. And let's check it. All right, so this is interesting. So this drop, this sequence here, if we look at the 127.2 Fibonacci extension of that sequence, where is it? It's exactly where the at the 2000 mark. This is why we see so much resistance here. Market is trying to break above, but it doesn't manage to stay above, and it's now falling down again. How deep will it fall? That's what we will look at now. I think we have a sell bias. I think the gold market is due for a little drop, and that drop needs to come down at least like somewhere around here. Why is that? Because this is a zone with a lot of liquidity. There's a lot of unfilled orders here that needs to be filled. So I can see the market coming down here, but in the same time, this is the thing, and this is what I wanted to talk about. While the technicals show that we should drop, the technical shows that we should do a drawback when it comes to gold. We've been moving up for a while now, for a minute now, and we need to come back down and fill some liquidity. We got a lot of liquidity here, 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 Like all these needs to be filled. But while the technical shows that the market needs to come down and do a healthy drawback, the fundamentals shows that the gold should run, like it should run to the moon right now. So why is that? For y'all that haven't been on the streams before when I've been talking about it, is because we got a lot of countries. We got Turkey, we got Russia, we got China, we got a lot, like there's a lot of countries that are accumulating gold right now. They are selling off the U.S. Government bonds. They're selling off they're selling off U.S. dollars, and they're buying gold instead. They're accumulating gold, and this shows also that people are and countries, regions, banks are losing trust in the U.S. dollar. The U.S. dollar will fall. But when it does, gold will rise. And this is what's happening now. So countries are accumulating gold because they are afraid of the dollar. This is how the US dollar looks like right now, but let's stick to gold. So with that said, all right, cool. We know now that we are just outside of the supply zone. So this is the supply zone of the big swing that we were talking about. And we just broke through it. We are underneath it. We just broke below it. What does that mean? That means that, wait, let me do it like this. All right, cool. So, look, this is the situation right now. So I showed you that we are in this big supply zone from the first big swing, the big drop that we had, and this supply zone is a very, like the 78.6 Fibonacci retracement here is very important. Breaking below it shows that the market wants to drop. So what it's doing right now is it's retesting it as broken below, and now it's coming back up and retesting it. And we'll see that when we look on the hourly time frame. So let's zoom in a little bit. So I've been waiting for the price to come all the way up here. I want to see it come all the way up here. Test the 73 as resistance. I mean the 1973, of course. Price level. Test it as resistance for another sell. And that would put us in a sell position. And it's a juicy sell. We got a lot of pips to catch. Because the next level that I see this coming to well, next level is here, but then it's down here to the demand zone. And that is 200 and almost 240 pips. It's nice. It's a very nice sell. So this might play out anytime today. I will want to say during this live stream, but we don't have so much volume in the markets right now, so I don't know if it's going to play out during the live stream, but within an hour or two, hopefully. And this is how we're going to set the targets. TP1, 1968, 1968. TP1. $19.69. Yeah, that's where we put it. TP2 would be 61. That's a very big TP2. Let's see if I can make it shorter. All right, let's see why we got so much support there right now. You see I know it gets kind of confusing with all these lines, but you see the dotted lines? That's from this last swing up here, this smaller swing, and you see these dotted red lines is the demand zone, and you see that the lowest line of the demand zone, which is the 88.6 Fibonacci retracement, is perfectly correlated with the 50% from the sweet spot of the bigger push, of the bigger sequence. Correlate perfectly, and therefore we got very strong support here that the market is trying to break through right now. Let's see if it manages to do that. But as I said, I want to see this retest first. So what I'm hoping for is bounce up, retest, and then we're going down. If you're impatient, and of course you got to trade here as well, but this trade here is risky because it's easy for the market to start going in the right direction and then we'll go up to contest this resistance as mentioned before. And as I said, I never call out any trades that I don't believe in, so we rather go for quality than quantity, right? Yeah, so the funny thing is that I would place the TP2 here. That's a big TP2. 61. That's a big TP2. Then we're coming down here, clearing all the liquidity down here. Damn. Like these candles are crazy that we've been seeing lately. So much push, so much liquidity coming into gold. All right, let's keep going with this. The thing is, I would need to put this one here. We gotta have something more along the way. $55.4. And last TP. Put it. I will leave it open actually, the last TP, but we can have on approximate number of about 1943. Yeah. And the stop loss, of course, most important. So we go in at about 1973. I will want to put the stop loss at about, yeah, at about, shit, that's a big stop loss. We don't like this big stop losses, but sometimes you have to. $77.7. We got big move. Why we're doing this bigger stop loss is because we got this big move, and until this big move happens, we might see the price play around a little bit in this area here, allowing for a lot of scalps to happen. But for this big swing move or day trade move that we see in here, we need to have this bigger stop loss. So it's a stop loss of about 48 pips. So be aware of that in your risk management. Always remember proper risk management. 48 pip stop loss. So it puts us about here, 77.7. That's that. Let's make an entry as well, so we see that nice and clear. And we can type this also. This is 40, 47. Oops. All right, this is what we're looking at. Let me send it out in the Telegram channel. If you ain't in the Telegram channel yet, then you better join it. So you are up to date with all the trade ideas and updates on the trades that's going on. Let's see. Prosperous post. So actually, I'm gonna call this out as a sell limit because it is a sell limit. Details and the charts. All right, so it's out in the Telegram channel now. It's a sell limit 1973. Perfect. We got a gold trade, gold sell there. Let's just hope that it comes back and does what it's supposed to do. If not, then we're gonna have to reevaluate the situation. So another thing when it comes to trading, like you do an analysis, like we did now, for example. So we're waiting for the market to come back up here, retest this level before it breaks down. But it doesn't mean that it has to happen. Maybe it doesn't happen. Maybe from here we see market drop. If that happens, then we have to reassess the situation and see what's going on and make a new analysis out of it and a new find a new trade, so to say. So that's that. But why I'm not taking a sell from here is because, like I said in the beginning, it's very unsafe. It's a very risky move. Market is trying to push below now. It's trying to push. It looks like this good volume down actually, but it might very quickly come back up. So if you want to scalp a couple of pips down here, very good, do it. But for me, I'm always waiting for those quality moves, catching those pips, because why I'm trading like that is also because I'm a very busy person, and I ain't got time to sit and monitor the charts all day and look for scalps. So I have to, when I sit in front of the charts, I want to get everything done. I want to have my trades set up. I want to have my move set up. I know what I'm going to do. I'll send it out to you guys on in the Telegram channel, and that's that. Then I can go on with my day and just monitor it every now and then and see that the market is doing what it's supposed to do. So we leave it like this for now. We're gonna check Euro USD very quick, and we're gonna jump into Bitcoin because I think Bitcoin might go in for some major moves this week. Euro USD is very dependent on what the US dollar does right now. Very. So Euro USD looks like it wants to dump. It definitely looks like it wants to dump. It looks like it wants to go down further. Why do I say that? Because we got resistance here. So this, everything you see here is a resistance zone. Boom. Why is that? We got the 38.2 Fibonacci retracement from this swing. We're testing it underneath, and we're testing the 50% Fibonacci retracement from the bigger previous swing. And both times that price came up and wanted to break through and get back above these two levels to put them as support, what has happened is the price hasn't managed to break above. So what has happened is, you see these wicks here. These wicks are signs of weakness. Weak wicks. Basically, buyers were trying to push up, but they didn't manage. So resistance holds well, and I actually see a possible sell scenario here. Maybe to come back down and test this orange line here. That orange line is a major trend line that we have had for a while. Alright, so let's zoom in a little bit. So you see how price is testing this resistance. It's testing it here even with a wick just. So basically it broke through, came up, retested it. So it did a perfect retest. So this was actually already a sell situation here. Very nice sell actually. So I would argue that we are in a nice sell right now. And maybe we should enter it. Let us see. Alright, so our entry will be here. Why is that? Because of this here. You see that, let me pull the line like this. So you see that we got support, trying to break through above again. So I want to see this break here. I want to see this white line break for us to enter a sell here. Right now, what the market is doing, it's ranging between this support here and this resistance. So it's just ranging here in between. In other words, a no trade zone. This is the no trade zone here. So we want to see it break below, hold that, and we're going in for a sell. Yeah, so now we get the 20-day EMA on a 50-minute time frame. Let's see if market bounce off this 20-day EMA, that's a sign of a lot of weakness for the buyers. And if that happens and we break below this line, then we're going in for a sell. That shows that the market really wants to sell off, and that the buyers have no control in the situation. They have no power. Yeah. So what I'm gonna do is I'm gonna set an alarm. The entry would be in that case in at 1.057. Yeah, 1.057. Sorry, 1.0757. Man, I'm confusing myself with these numbers. 1.0757 will be the entry. Yeah, we're moving down. All right, I'm gonna set an alarm here. Wait. Maybe we don't need to because it's already getting very close to the entry zone. Yeah, market is getting there. Let's just check gold quick while we're doing that. Gold ain't doing much. All right, so we broke the zone. What we want to do now is this. We want to see this hold. So be patient here. Don't rush into the markets. Be patient. We got 12 minutes until this candle closes. This is a new candle. We got 12 minutes until it closes. We want to see it close underneath here, all right? When the next candle comes, we want to see that it's not pushing up directly back above again, like here, coming back up again. So let's watch this candle close underneath. Let's see that hourly candle close underneath, and then we're good to go. So about, all in all, I would say about 27 minutes until we have a situation where we can enter this market. And don't get stressed when you see the market start to push down or something, because it will chop around. It will play a little bit. It will play a little bit. So it can push down and then boop, go straight back up again. We want to have our entry here. If it runs away from us, we look for a new trade. There's always new trades. Remember that. Don't get married to one trade. Don't get stuck with one trade. That's Euro USD. Gold is nothing is happening. Euro USD, we got about 26 minutes until we have a trade that we can enter there. Now let's look at Bitcoin, a quickie. Let's clean this up. Let's clean this. All right. Okay, so Bitcoin, the situation is like this right now. We've been talking about these channels here that we are in. This channel, all right? What has happened with these channels? And inside this channel, we have another channel. Broke below, tested, boom, broke. We thought we were going to see a big dump here. We took the sell, actually. If you guys remember, we took the sell, made a lot of pips. I think we made like, I don't remember, like 300 pips or something. And we took that sell, and then market went back up again. We took a lot of pips on this pump here as well. So we've been good with Bitcoin, even though it has been moving a little bit crazy. Why am I saying that? Everything has been going down in the market, and Bitcoin has been going up together with gold. And that is of course good, that is nice, but it was unexpected. So we have these channels, and now what's happening is this. Look, let's zoom in. Let's go on the 4-hourly time frame. Now what's happening is this. I'm gonna remove this. So first, you see this orange line here. It's very important for you to know what that is. This orange line is a key zone. It's a key area. I'm looking on the weekly time frame now. So what you see in here is the last bull rally. This is the last bull rally that we had, and this is the whole bear market that we've been in now for a while. So if you guys see, when this bull rally started, we got this major momentum up. Market came down and tested this zone, which is the 28.7. I would say the 29. I say between the 28 and the $30,000 range. It's this major support, this key zone. So market came down, tested it, moved up, came back down, tested it, came back up, moved down, tested it, and then finally broke through. This is what I'm saying. Third time is always the charm. And now what's happening is We're testing it, but from underneath. So we're testing it as resistance right now. So we definitely want to see this resistance zone break. If we do or not, that's a good question. If we do, we can see a big move up. Now when you know what this orange line is, that it's a major key resistance area that we need to break through, then yeah guys need to understand also and see in the same time where we're at with this channel that I've been talking about. So this channel here, let's just focus on this trend line here. You see this trend line? Where we're at. We broke above it, playing around a little bit, and then we came and tested it as support. Support. Broke below resistance, and yeah, honestly right now it's just messing around with it. It's like it can determine if it's going to go below or if it's going to go above. It can determine if it's going to hold that support or if it's going to be a zone of resistance. But the important thing to understand is that while we're playing around with this trend line, we're also getting squeezed against this big resistance zone, this key area that I was talking about. All right, this key resistance zone. So we're getting squeezed. Here's the resistance, and here's the trend. Squeeze, 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 squeeze. We're trying to break below. We're trying to break below. We're trying to break below, but it doesn't happen. So what do I make out of this? Well, technically, this is what should happen. Unfortunately, I like to see Bitcoin go up, but technically, this should happen. Realistically, what I believe will happen is this. And then drop. So a major move up to about almost 31,000 and then a drop. I'm not calling out any setup on Bitcoin yet. Why is that? Because I want to see what happens. We have a very nice sell entry here, yes, of course, but in the same time, we have a lot of things saying that Bitcoin should push above and break above this resistance here. So I cannot call out any sell or any buy here. Buy situation is something we will have if we see more confluence, more confirmations on that this yellow line here or this orange zone here holds as support. Then we're definitely going in for buy. So basically, hourly candle closing above here, and next one also staying above, so that we know that all right, this holds. It didn't just come up to pick liquidity and go down again. So right now for Bitcoin, there ain't much to say. XRP is pumping due to SEC doing some blurbs. They doing some mistakes. They main witness got disqualified and this and that. So looks like they're losing the case, but it's been looking like that for a while now, and the case is still going on. But if they lose the case, which will happen, but when they do it, you best expect to see XRP fly. That's crazy. Yeah, nothing is happening yet with Euro, gold. We're moving up. I think we're coming up to test this level. Nothing is happening yet. Guys, no trade yet. It's a slow Monday so far. We leaving it like that. We got two setups, the Euro USD, we got the gold. We monitor it, watch what happens, and we'll probably in a trade within a couple of hours, all right? So I wish you guys a blessed day, a blessed week. Stay prosperous and trade safe. Peace out.